Hey everyone, good morning. Hope you are doing great today. So far, we explored how artificial intelligence is changing the world and how we can use it to become smart students and professionals. Let me share the screen. Am I audible to everyone?
Yeah,
Last two seasons are on workshop AI concepts. If anyone missed it last two seasons, you can watch it in YouTube channel. Links are available in comment box. Please have a look. Let me share. In the section on stock market basics concept. Let me ask you a question. To be honest, how many of you heard about stock market? Okay, cool. By the end of the season, you will understand what is stock market actually. You will know the difference between a stock, an index, and company valuation. How does it grow and crashes, and how again growth. And you will learn how to not panic every time the market dips. Why we need to talk about the stock market. You will use an iPhone, it is an Apple brand. Shop on Amazon, what Netflix. Guess what? These are all public companies that you can own the part of buying their stock, right? Am I audible to everyone?
yeah, yeah, yes.
Sorry. Here is the example I will express one thing. A school teacher was started investing in S&P 500 index every month since the 1990. He likely now today he is a millionaire. What is stock market? Will I will explain in simple terms. Imagine you and nine friends of starting a pizza shop. You need money to buy ovens and rent a space. Market your business, right? For that you don't have enough money. Total estimation plan of pizza shop business is $10,000. So you need to divide $10,000 to each you of your friend thousand, right? To get help to start the business. In returns, the you need to give each of ownership of your business equally as a share. That exactly what happens in the stock market. Here, the stock market is a place where buyers and sellers share of public listed companies. Lets companies rise the by offering ownership to public. It lets investment own the small slice of business like Apple, Amazon, and Netflix, etc. Yeah, I will show you the example of it. Here. Why we need to invest in the stock market? If we invest in the stock market in $9,000 in 2015, The result is here. In, to, in 2015, the Apple price was 28.43 with 1000 rupees dollars investment. Approximately, we have 35 shares, right? Today, current price of the each Apple share is $217. Current value of 2025 is $7,659. In just 10 years, without any efforts, you will get $6,659 profit. As same like in Amazon, 25,000 is your average. 25,000 rupees is an average. You have approximately 39 shares on that time if you had bought. Today, current price of the Amazon is $192. Approx value is now $7,589. Of without any efforts here, we can see the results of same same as Amazon, Tesla also. I will show the real visuals in the trading view once. This is the trading view app. For every company, we have specific symbol stock tickers that we can know in the Google also. Like what is the symbol in stock market? See, here is the symbol AAPL. We can know any of the symbol of stock company. Here we can set as time frame 12 months, which is equal to 1 year. We can check the year to year performance of the stock. See here. In 2013, the stock price is 13 rupees, $13, sorry. $13 to currently the stock price is $249. See how the stock is rising. Likewise, we can see Amazon. AMZN is the Amazon symbol. In 2015, the stock price is here. We can see it is a black box of 17.27 is the stock price of Amazon in 2015. Now current price is $220. See how the change we can see here. Likewise, Tesla also. In 2015, here $17 rupees. $17 to 407. In 10 years, approximately, see we can see the calculation. 100x returns we can see visuals. We can see visuals. Likewise, here the stock market is a tiny pieces of the favorite companies. When those companies do well, we benefit equally. If they do poorly, your stock value also drops down. stock market is not a magic or gambling. It's ownership and driving by business performance plus investor emotions also. You have understand, right? Some here, okay. Think about this. Why to invest in the stock market? Why do we invest in the stock market? Right now, a burger costs around $5, right? Now imagine 10 years from now, that burger price might cost cost you $8. That inflation doing its thing. Prices goes up, where we like it or not. But here is the deal: if your money is just chilling in savings account, growing superly, you are kindly falling behind. Now what if your money was invested in the stock market? Instead of growing pennies, you would be growing dollars way faster than prices are rising. Here I would like to say you another example. Your money is saving is like a freeze. Your savings account is like a freeze, not a microwave. Also, like keeping money in the bank is putting food in freeze. It stays safe, but it doesn't grow, right? Investing is like putting it in the microwave. It heats up, grows, and become ready to serve. So instead of just saying, let your money grow, here I would like to tell about what is compounding. Compounding is a like basically your money makes money, and then that money is making money. It's basically interest on interest, right? I'll tell you an example. Mm, Compounding is like just rolling snowball rolling down from the hill. At first it is a small, right? But at it's rolling, it's keep up more snows, picks up more snow pick, and here picks up more snow as like interest of money. Over time it's become a giant snowball as like money returns. It starts small, but the longer it rolls, it becomes faster and bigger too. In the stock market, the longer you leave it, the bigger you get. All right, I will let to be honest. Every Here is an example: the money of planting a money. Imagine a planting a money. The tree is saying just $1,000. After 1 year, it grows $100, just like 10%. Next year, it grows with interest. We combine the investment and returns 110%, we get the value of our current price, not just on original dollars is $10,000, but also on we are earning $100, right? And every year it gets faster and bigger too. Here is the result: from $1,000 is nearly we get $20,000 in 30 years without adding any more. Just planting a seed here, we are not doing any efforts, right? In just 30 years we are get likewise the same in stock market also. Like if you invest $1,000 after 30 years we get $20,000 in compounding. That is the power of compounding here. Action Harshad will continue from the next topic. Just one.
Primary goal in our life, the primary goal in our life should be earning the money, right? Like, I mean, it's a fact that the more we earn money, the more respect we gain in the society. So there are different ways to earn money. Like, there are different ways to earn money. So let's say we have a money. So one is a active income and the other one is passive income. So active income in the sense I am doing any job or I am doing any task and I am earning for it. It's an active income. So other one is passive income. So to earn passive income, there are different ways. Like let's say if I have money, if I invest if I deposited my money in the bank, I will receive some interest. Or if I deposit my money into real estate, I will receive some returns. If I deposit my money into any bonds, I will receive some return. So there are different ways. Or if I give my money to loan to anyone, so I may receive interest based on that. There are different ways. So here the question is, what is the best way to earn money? So it's like, if you check the GDP, so it's like, if you check the GDP of the country, any country, you can see that, okay, the money which we are earning, it will be not enough to satisfy all of our needs. So, we need to get compromise on certain things. So now there are so I mean to for the passive income there are different ways. So here we are discussing why the stock market is the best out of all options available in the in the world. So like, as you can see, like, um there are different options in the stock market. So yeah, first of all, if I have the money, so let's say, if I have some money, I can put my money in some savings account, or I can put my money in any fixed deposits, or I can buy gold from that amount, or I can invest in real estates, or I can invest in bonds, or I can give loan to anyone and earn a return based on that. But instead of all these options, why should I invest in the stock market? Okay. So, there is no guarantee returns. It's not that, okay, if you invest in the stock market, you will definitely 100% you will receive returns. There are no guarantee. In fact, if you check the statistics, there are people who will lose more than the gains. Like if you check, in India, the SEBI, the regulator of the stock market, it had notified that 90% of the traders will incur loss. Only 10% of the traders will incur profit. These are in the options. The same with the USA. So, there are people like who will incur losses more than the profit. So in that situation, why should I invest in the stock market? So like there is no guarantee. So let's say if I if I buy the gold, there is a guarantee. Okay, it will be helpful for me in the future. If I buy any real estate, there is a guarantee that it will rise in the future. If I buy any bonds, if I buy any fixed deposits, there is guarantee that I will receive some returns. But in the stock market, there is only probability. There is no guarantee. So in that situation, Why should I invest in the stock market? Okay, like, uh, I mean, when there are several options before me, why should I invest in the stock market? So for that question, I mean, let's answer. Like, let's say, okay, I had invested in the stock market. So after investing in the stock market, if I lose my money, then what will happen to me? I mean, then who is responsible? Like, let's say I have some $10,000. I had invested that $10,000 in the stock market. And after investing in the stock market, my $10,000 had decreased to $6,000, or my $10,000 had decreased to $4,000. I had lost my amount. Then what is the situation? Who is responsible for my loss? Like, so for that, we need to understand that stock market, it should be a, I mean, there are two things. One is investing and the other one is trading. So trading in the sense, if you are buying and selling the stocks within 1 year, we call this as trading. Whereas on the other side, if we buy and sell stocks more than 1 year, we call it as investing. So in trading, there is no guarantee that we will get the profit or we will get the loss. There is no guarantee. There is no guarantee of returns. It's just a probable game. But when we look at the long-term outlook, definitely almost 99%, 99.9%, we can tell that stock market will make money for us. So how? So I mean, there will be, first of all, there may be some, I mean, first of all, there may be some, uh, I mean, you may some hesitate. You may hesitate that, okay, if I invest in the stock market, what will happen to my amount? Will I lose my amount? Okay, I mean, there may be some hesitation before. I mean, that arrives before coming in, before investing into the stock market, and of course, there is no mistake in that. But if we check in the, I mean, but if we check in the historically, I mean, as you can see, these are the options where the stock market failed due to different reasons. I mean, as you can see, there are different options from the year 1990 to the year 2025. In the last 35 years, the stock market had fell so many times, n number of times. As you can see, how many times it had failed due to various reasons. Various reasons. As you can see, the reasons too. There are, due to various reasons, the stock market had failed. What does it mean? What does it mean means, what does it mean? Let's say if I'm investing in the stock market now and there is some negative news, the stock market will fail. What will happen when the stock market will fail? My amount will get decreased. I will get loss. But what this is happening on the short term. But when you look at the long term, there is a guarantee of returns. Like let's say here. I mean, as you can see here, I mean, as you can see, in the year 1996, as you can see, in the year 1996, let's say, let's imagine if I had invested in the stock market in the year 1996. So, okay, it had raised to somewhat. But again, 1997, it came to the same place where it was in the 1996. So what is happening? So if I purchased it 1996, okay, it had gone up somewhat, it had gone up. But again, it had came again to the same place in the 1997. So after 1997, again it had gone up somewhat, it had gone up, somewhat it had gone up. Again in 1999, it has came to the same place which was in the 1996. What does it mean? It means that if I invested $10,000 in the 1996, in the 1999 too, my amount is the same. I had not gained any profit and I had not lost anything. So, okay, let's imagine. I mean, thus in the same period of time, if I invest in any bank, I may have gained somewhat return. In the same time, if I had given loan to any friend, if I had purchased gold, if I had taken bonds, I would have definitely earned some returns. But in the stock market, on the 3 periods of time, I had earned nothing, a completely zero. But When you look at the long term, after 1999, when you look at the long term, it had raised, and it had raised in such a way that uh, even, I mean, the returns which you had got in the stock market, but had never got in any other sector. I mean, in any other means, by any other means you. So as you can see, I mean, not only that, you can check anything. Like I mean, if I invest in the stock market in the mid 2016, as you can see, it was in this place. Okay, it was rising, but again it had failed in the 2000, in the 2020 during COVID. It had failed in such a way that it had failed in such a way, as you can see, it almost came at the place where it was at 2016. So what does it mean? If I invest in the 2016, okay, I had earned something, okay, I had earned some returns, but within a few days, I had lost everything. So in the 2020, I had came again to the same place where I am at 2016. So basically here, I had not earned any returns. On the 4 years, it's been 4 years, and my returns are null. In these 4 years, if I had invested in any other sectors, in other places, I would have earned returns. But when I look at the long term, as you can see, it had raised so further that, I mean, I had earned so much returns that such returns I will not get in any other place. So, what does I mean? It's the history. It's not any fact. I mean, it's not any unfactual thing. It's unfactual, and it's an history. What's the history is telling us. So, do you? I mean, so according to this, we are getting one idea that, okay, stock market affrights us. Stock market will test us. Stock market will, I mean, pressurize us. But then, if we, I mean, if we stood strongly at those times, then it will give us a very beautiful fruits. So, according to this, some analyst, the analyst, I mean, the worldwide analyst, they had, I mean, they had, what you can say, they can analyze, they had analyzed everything, and they had, I mean, they had told that if you, I mean, before investing in the stock market, you need to tell yourself that you need to minimum you need to stay invested for at least 7 years. Okay, so uh, I mean, you need to, I mean, if you want to, I mean, to get good returns, you need to at least invest for 7 years. So again, there is a statistic. As you can see, Nasdaq. I mean, in USA, there is one thing. There are different things like Nasdaq, Dow Jones, and S&P 500. So as you can see, I mean, these are the Nasdaq. I mean, these are the returns given by Nasdaq from the year 1996 to 2024. So in the sense, like for 38 years, in the last 38 years, these are the returns given by the stock market. I mean, as you can see here, the red color, which you are seeing in red color, it means it is a loss. I mean, the red color which you are seeing, it is a loss. And the yellow color which you are seeing, these are very low profits. I mean, there is no use of such profits. I mean, because let's say in 1986, just imagine, like, if I want to purchase any phone now, it will cost some $1,000, $800. I mean, approximately, if I want any phone, it will at least cost $500, 400 to $500. But in the past, if you, I mean, maybe the same phone will get to me in the $100 or $150. So the inflation, because of inflation, the returns, very low returns, which you are seeing in low yellow color, I mean, these are not returns. I mean, these are so low profits that it can be negligible. I mean, there is no use of such profits, because when we compare this with inflation, we are in loss only. I mean, although I'm getting here 5% of profit, but when I compare with the inflation, I'm at loss. So the which you are seeing in the gray color, so it is somewhat okay, somewhat good returns, somewhat okay, good returns. But when you are seeing the color in green color, these are very excellent returns. So as you can see in the history is telling us that when we invest in the short term, as you can see, like when I invest with the intention of any 1 year, 2 years, 3 years, 4 years, 5 years, at least for the 7 years you had checked. So there is no guarantee that you will get a profit. You may get a profit, or you may get a loss, or you may get very small amount of profit, or you may get again normal profit. So it can, I mean, anything can happen. We cannot guarantee that okay, you will definitely get profit, you will definitely get loss. There is no guarantee. It's a probable market. But when we look at the long term, we can definitely say that definitely 100% you will get the profit in the stock market. As you can see, I mean, this is the same case with the SIPs you do. I mean, there will be a long-term outlook, because as you can see here, almost after, I mean, almost as you can see, okay, there is almost from the 7th year, as you can see, the losses had been decreased. The chances of losses is getting decreased from the 7th year. I mean, till the 7th year, there is somewhat high chances of losses. As you can see, 38%. I mean, if you had invest at the month of January, you may get a 38% of losses. 38% is not the normal thing. Like in the first 2 years, you can see in the first 2 years, there is a chance of getting 31%, 35. I mean, almost 40% of losses. And also there is a chance of getting some 100% of profit. Anything can happen. But when we look at the long term, there is a chance of profit only. I mean, the long we invest, the chances of getting loss gets decreased. The same with S&P 500, as you can see. I mean, when you, as you can see, like, I mean, for the 5 years, for the first 5 years, there is a chance of losses, there is a chance of profits, everything. But from the 6th year, the chances of losses had almost become zero. There is very low chances. I mean, from the 6th year, you had definitely got profit in the S&P 500. So, I mean, based on this, what we are getting the idea means, in the stock market, uh, on the short term, I mean, first of all, stock market is not any guarantee market. So we can get loss, we can get profit, anything can happen. But so that's why many people get afraid to enter the stock market, because they're afraid that okay, if I deposit my hard-earned money into the stock market, and if I lost, what will happen to me? I mean, the my hard-earned money had will go vain. But that's not the reality. I mean, of course, when we look at the stock market on the short term, definitely there will be hiccups, there will be different things. But when we look at the long term, definitely almost 99.99% we can definitely tell that definitely we will get profit. The same thing which we had discussed about too. As you can see, like for the almost 4 years, for the 4 years, although it had raised somewhat, but for the 4 years, I had earned nothing. I had earned literally zero. But after 4 years, if I get invested in that, in the same thing, then it had raised further. So, so in the stock market, there are different people. The people who loves to take risk, the people who are neutral, the people who don't love to take risk, who wants to avoid risk. So the people who wants to avoid risk, they need to look at the stock market in the long term perspective, but not on the short term perspective. Whereas the people who loves risk, I mean, they can risk their amount. Okay. I mean, there are people, you won't believe, there are people who can earn $1 lakh in just 30 seconds. I mean, you won't believe there are people who are earning some lakhs of dollars in less than a minute. That's the risk they are taking. I mean, what happens is, they will invest the stock market, they will invest in options, in at a time. So if they, I mean, if they get profit, I mean, if everything had happened according to their thoughts, they will earn $1 lakh within 30 seconds. I mean, if it gone reverse, they will lost all of their amount. So it's just like risk versus reward. I mean, they can earn $1 lakh in 30 seconds, or they can lost such a huge amount in same 30 seconds too. So I mean, it's can the risk. I mean, you can become a millionaire in the overnight, or you can become. I mean, it's vice versa too. So that's how the stock market works. So again, as you can see, like by and like this is the table. I mean, this is the historical table based on the stock market. Like if you had invested from 2000, like 10 years, from 2000 to 2009, if you had invested in the stock market, you would have earned 15.2% returns. Like as you can see in the 10 years, from the in the since last 10 years, and I mean, if you had invested anything in the stock market in the year 2015, and by now you should have earned at least 12.4% of returns. I mean, as you can see, like I mean, such a huge returns you won't get anywhere. I mean, again, it's again on the long term. Again, on the beside, as you are seeing that, this is what buy and hold. Buy and hold in the sense, I had purchased in the 2000 year until the 2009. For the 10 years, I had holded it in the same way. But on the other side, okay, if I had purchased something, I mean, let's say I had invested in the stock, I had invested in any stock, and after my investment, it started rising. So let's say I had invested $10. After my investment, from $10, the stock raised to $12. Okay, I became so happy. Oh my God, it had become $12. So I just sold. I had just sold my stock because okay, I was so happy. I was so excited that okay, it had gone up to $12. Okay, it is enough. It is enough for me. Okay, I had got free amount of $2. I had sold it. But at the time, what is happening? I am getting returns of only 3%. I mean, I'm only getting returns of 3%. Here, what is happening? Okay, I had purchased the stock. After purchasing the stock, I had not holding it for 10 years. I had not holding the stock for 10 years. Okay, I had purchased it. After some days, I had saw that stock. Okay, I saw that stock that okay, from $10 it had gone to $12, or from $10 it had gone to $13, or from $10 it had gone to $15. So, okay, I had become so happy. Oh my God, my amount had increased. I had got a free amount of $5. So I became happy and I had sold my shares. So at that time, I'm just earning very low returns, 3.2, 2.8, 2.6. But instead of doing this, if I just bought one share, I had forgot it completely for the 10 years. Any share out of my pocket money or out of any rewards or any awards, I mean, I had forgotten it completely for 10 years. So these are the returns I'm earning based on the investment I had done. So these are very high returns. These are not a low returns. I mean, as you can see here, I mean, as you can see based on this, in gold, like, I mean, gold, many people will tell that, okay, gold is the real amount. I mean, the gold is the real currency. The currency which you are using now, the dollars, these are just a paper currency. These are made by government. If anything happens, this currency will lose its value, but the gold will never lose its value. Gold is the real currency. But as you can see, the gold, when we check in the long term, on the 20 years, I mean, I mean, these are the based on like from the 20 years, in the last 20 years, like in the sense, I mean, in the way you can think like from the 2005. I mean, in 2005, if I had invested for 1 year in the gold, okay, then I would have earned 42% of returns. But on the 20 years, I mean, in 2025, if you had checked in the gold, I had got only 13.8% of returns, only 13% of returns. Whereas you can see these NASDAQ, S&P 500, these are the stock market related companies. In the stock market related companies, you had earned 20%, almost 19% of returns. I mean, what does it mean? It does mean that my amount had increased 33.6%. It means my if I had invested $1, my $1 had changed into $33.6 in the 20 years in the Nasdaq. Whereas in the S&P 500, my $1 had changed to $15. Whereas in the gold, if you check, only my $1 had changed to $5. In real estate, you can check it's just 2.5x. Like my $1 had changed to $2.5. In the depth in the depth in the sense I had given loan to anyone, or I mean it's type of loan debt. So in the debt, I had earned only uh, only very low returns of 7.5%. So again, in the end, what all these things are telling, the stock market, there is no need to get afraid by looking at the stock market, or to get hesitated before entering in the stock market. When we look at the long term outlook, definitely we will be, definitely we can assure that at least, we will be safe. As long as it can be, the more there is a chance of gaining more and more returns. So, this is the table. Based on the historical returns, this is the table drawn. Let's say if there was any person, if he had invested 1 crore in the stock market, to become 2 crores, it will take 6 years of time, at least 6 years of time. In the sense, you can simply think like, to double your investment. It's not any 1 crore. You had kept anything. Like, let's say if I had kept $10,000 in the stock market, to double my investment, to become the amount of $10,000 into $20,000, it will at least take 6 years. At least not in the at least, averagely. It averagely takes 6 years of time. But as you can imagine, 6 years it is taking. In the 6 years, there will be so much of hardships. There will be so many hiccups. I would have lost so much money. Sometimes the stock market fell so much that we will be almost lost, half of our investment. So again, we need to, we need to stand by all those struggles, all those hardships. And we need to look at the long-term outlook. But when we do that, after 6 years, our investment will become so easy, because in those 6 years, I would have learned so many things. Okay, and now I may have not much knowledge, but on the 6 years, I would have learned many things. And after, I would have learned many things. So after those 6 years, the stock market looks very easy for me. So it's just that you can imagine, let's say I am studying in the class 1, or I am studying in the class 2. It looks very difficult. Okay, what is this? These subjects are, the examinations, everything looks very difficult. But when I go to class 9, when I go to class 8, the subjects which are in the class 2 and class 3, they looks very easy, very easy. Okay, these are very easy. I would have done just, within some few minutes, I can complete the whole syllabus. So why this is happening? It's the experience I'm gaining. So, again, here, here we are telling that, first of all, the stock market, it will be very difficult. It's not an easy, because in the stock market, there are people, several people. Like in stock market, new money is not getting generated in any way. Let's say in stock market, there is no money generation. It's just the people who are losing, they are not getting the money. The people who are gaining, they are getting the money. Like, let's say if I had invest in one stock, if I'd invest anywhere, I had gained some profit. So that profit is coming from someone who had got lost. Okay. There are people, like you can see, there will be people who bet that the share price will fall, and the people who bet that the share price will rise. If the share price will rise, then the people who had betted on the rise will get the profit, and the people who had lost, who had not betted in the rise, they will get lost. It's just like a concept of casino. Like, I mean, if you go into any casino, or if you go into any betting, there will be no money generation here. There are some people who will win. And how does those winning people getting the money from the people who had already lost? And it's just that. So in the stock market, I mean, when we look at the long term outlook, definitely we can say that there will be a chances of profit, uh, instead of the loss. So, I mean, is there any doubts and understood? So, I mean, here the intention is to tell us that there is no need to get afraid by the stock market. There is no need to get hesitant before entering the stock market. Definitely, on the short term, it will look difficult, just like other courses. I mean, maybe when you entered the college on the first day, when you entered the school on first day, or when you entered any coaching on the first day, you would have definitely felt some difficulty, or you had definitely felt some hesitation. But as time progress, you will learn many things, and after some days you will become expert of that, and there is no need to get afraid. So that's the main intention to explain this. So, I mean, do anyone wants to ask anything? Correct. I mean, have you understood? Oh, I mean, have you understood, team?
Yeah.
No. Again, like, if you have any doubts regarding the stock market, when you can ask anything. Yeah, if there is nothing, then we can end the meeting. Um,
Thank you.